Oh, hello everyone, and welcome back to the crypto channel number one, where we covered most of the most resonant and interesting crypto news about crypto market, where we're talking about Bitcoin, Ethereum, all of that in one place. And not just talking, but actually explaining how it can influence of the price of the crypto assets for us as the crypto holders. So today we have such interesting topic as Ethereum price drops below $3K, but Ethereum options data reflects optimism. Also, we're gonna talking about stronger crypto regulations in United States won't necessarily help prevent fraud. And I think actually worth mentioning that analysts say Bitcoin price needed a breather before chasing new highs. So hit that like subscribe button if you're not subscribed yet, and let's get started. So $130 million in Ethereum options expire on Friday, and derivatives data shows that bulls are in control and planning to push prices higher in the short term. So Ethereum 81% rally over the last 3 weeks caught professional traders off guard, and this week upcoming options expiry reveals that one of the $430 million in contracts set to expire, only 7% of the net ruler to bearish put options will be available if Ether holds above $3,200 on August 13. So here we have actually the Ether price in USD at Coinbase, and we can see that now it between $3,000 and $3,200. So curiously, the crypto market is holding its recent strength despite the Senate crypto critical infrastructure deal that recently passed. Although the $1 trillion infrastructure bill may encounter some lengthy hangups in the House of Representatives, the approved version did not clarify that constitutes a cryptocurrency broker, and this is expected to harm the industry in the future. So institutional investors were likely behind the recent rally. So institutional investors' adoption continues to increase, and this week Neuberger Berman, a New York-based investment and management firm, filed for a commodity-focused fund. The $164 million commodity strategy fund plans to gain crypto exposure using trust and exchange-traded funds. Furthermore, Coinbase Exchange reported that 10 out of the top 100 largest hedge funds in terms of assets under management are clients of the platform. Even more interesting for Ether supporters was the flipping that occurred as the exchange traded more Ethereum volume than Bitcoin in the second quarter of 2021. So Coinbase cited the emergence of new use cases, including decentralized finance, non-fungible tokens, and smart contracts as a reason for the high Ether volumes. Whatever the case with the fueled Ether price, bulls now enjoy a vast advantage leading into Friday's option expiry. So open interest shows an apparent balance between calls and puts. So the initial view, actually here we have the options aggregate open interest, and the initial view shows a reasonable balance between the neutral to bullish call options and the protective puts, which indicates that bulls lacked the confidence to bet on the recent rally. Moreover, more than half of the bets that been placed between $2,100 and $2,900, this data clearly shows that professional traders weren't expecting a rally above $3,000. So the result is a major $2 million of protective puts that will participate in Friday's option if Ether holds above $3,200. This number increases to $19 million if bears manage to put the price below $3,100, and it rises to $27 million if Ether trades below $3,000 on August 13. So at the moment of video, the Ethereum price is above the level 3,200. So bulls currently lead by $165 million. So the $167 million of the call by options have been placed at 3,200 all over. The net result would then be a 165 million advantage for Eastern True to bullish instrument. This gap will be reduced to $120 million if bulls fail to hold the 3,100 support. So I think it's really quite interesting. Let me know in the comment section. Let's discuss on it. Will you agree with that? Can you agree with that? And also hit that like subscribe button, because we on a daily basis produce video for you. So I hope you enjoy. I really hope you enjoy. So stronger crypto regulation in the United States won't necessarily help prevent fraud, says O'Coin. Megan Moreau said an incubator approach might be one possible solution to the current patchwork of financial regulations in the United States. So through O'Coin, Chief Compliance Officer Megan Monroe said that there were still certain gray areas over cryptocurrencies in the United States. Further regulation may not be the best solution. In a statement to CoinTelegraph, Monroe said current United States regulations are sufficient to police cryptocurrency exchanges, token issuers, and custody wallet providers. But jurisdictional boundaries of these federal financial regulators are neither clear nor collaborative. Rather, she advocated for a framework with greater clarity to determine which crypto firms should be subject to regulation and let investors know which protections are available. So a clear regulatory framework with established jurisdictional boundaries, flexible compliance standards, and open communication channels with registrants as well as with state regulators would be a good way to initiate an evolving framework for market participants to grow their businesses, said the Ocon Chief Compliance Officer. This would provide retail customers that seek to work with regulated entities a clear understanding of the investor protections that will be available to them. So we do not believe that further regulation will necessarily prevent fraud and platform abuse. Fraud should not be limited to focusing on retail customer regulatory compliance issues in the securities markets. So, two of the major government agencies handling digital asset regulation in the United States, the Securities and Exchange Commission, have different jurisdictional claims regarding crypto. So, the Securities and Exchange Commission often determines whether tokens are securities using the Howey test with chairperson Gary Gensler. So, everyone in the crypto industry, including decentralized exchanges, falls within the regulatory purview of the federal agency. However, former Chair Christopher Garantlow, former Commodity Futures Trading Commission, Christopher Giancarlo, has claimed that cryptocurrencies are commodities and thus would be subject to regulation by the Commodity Futures Trading Commission. So the apparent lack of clarity can be seemingly confusing to crypto firms that are considering relocating to the United States or local ones making the transition of the digital to the digital space. David Schwartz, Chief Technology Officer of Ripple Labs, told Cointelegraph earlier this year that it was difficult to figure out which laws apply and how they apply to something like cryptocurrencies or blockchain technology. So I think it's really interesting what the Securities and Exchange Commission and the Commodity Futures Trading Commission says that stronger crypto regulation in the United States won't necessarily help to prevent the fraud. I can agree with that. And what are you thinking? Let me know in the comment section below. So let me know also, are you believe that Ethereum price drops below $3K? Or did you set up bullish for that? So hit that like, subscribe button, and also hit on the screen right now and watch to the next video, because you can find even more actually really interesting and most of the great crypto news in there. So click on the screen right now, watch the next video, and see you in the next video. Bye.